Well, good morning. I'm Marlin Bohling with you, trying to make an attempt to get back in the saddle here this morning. And we'll take a look at what's going on with our ag commodity trade in the overnight markets here. Let's take a look at the corn, the corn market. We'll start with that. It looks like in December corn, we're about 1 3/4 higher overnight at 661 1/4. So it didn't do too much. The March is up 1.50 cents. Now, let's also take a look at what's going on in the soybean trade here overnight. Soybeans not doing much of anything. You have January 1.25 cents higher. We're at 14.38. And you have March 0.75 cents higher. That's about all it can do. It's at 14.42 It's about as strong as my voice. Now, let's take a look at the wheat. And in Chicago, you have December 4.5 higher at 803 3/4. In Kansas City this morning, we have that December contract 1 3/4 higher. We're at 936 per bushel. And in Minneapolis spring wheat, well, we're just a penny higher with December at 949. Well, we have Chris Swift on the line, and he is with Swift Trading here in Nashville. And he joins us to talk a little bit about the setup for today's trade. Let's start with this corn market here first here, Chris, because I know you work heavily with the cattle industry, and this is a key component there. And the corn market has a lot of people scratching their heads right now what it may do between now and the end of the year. So to me, it seems like it's just stuck in a sideways pattern here. What do you think?
Well, and it is, and I think that alone is pretty impressive because if you think about we're already done with harvest, we've got not much to look forward to until we get into the March-April timeframe where we can get weather forecasts that will tell us pretty much what our next growing season is going to look like. So I think it's impressive in itself that it's holding up at these levels here, and it's been consolidating even tighter over the last 5 or 6 days, and I have to believe that's more due to just the holiday trading. We've seen some significant volatility in the energy markets, and I think that's another reason why both the beans and the corn have been able to stay up is they're, such a good byproduct for energy, and we've just not seen energy go down that much over the last, several weeks.
Speaking of the soybeans, did I hear right that in Brazil, the new president wants to do away with their petroleum mandates for biofuels, or what's the deal there?
I have not heard anything about that, Marlin, so that's a new one on me, but I will definitely look into that to see what I can find out. But, no, I've not heard that yet.
Okay, I know that's a definite point of discussion. But overall, if you look at the January soybean chart here, again, it just seems like it hasn't really gone anywhere except in a very big, wide-ranging, sideways, choppy pattern. Do you see any better opportunities for the next month and a half?
Well, for the triangulation, it is getting so tight, it's naturally going to have to break out at some point in time because it's narrowing into a pencil point. When we look at the products of soybean meal and soybean oil, both of those are at the top end of their trading ranges, especially the soybean oil. We came very close to making new contract highs last week in the soybean oil. So all of those products are still in huge demand. We're trying to rebuild our poultry flocks after all the avian bird flus that have come about. So I think that we need a lot of that corn and soybean meal product, and I think just the sheer demand alone for our livestock needs is going to help it keep buoyed right now.
Now, what about wheat? Is it totally divorced from the corn at this point?
I think so. I think with the weather that's coming in over the next couple of weeks that we'll see greater germination of some of the wheat that hasn't germinated yet and at least help some of it that has. So I look at it as already kind of having resumed the downtrend. Yesterday we kind of set new lows in this decline from the October high, so it's just weakening a little bit. But again, look at the price of wheat, $8.21 a bushel. That is a phenomenal price for wheat when generally we've traded it between 4 and 5 for a month of Sundays.
Yeah, it has been a crazy market, that's for sure. We'll come back in a moment and we'll analyze the livestock trade and the fallout from that cattle on feed report last Friday when we come back. Well, we're back and we're talking with Chris Swift of Swift Trading in Nashville. Chris, I haven't had a chance to visit with you since that cattle on feed report came out, but when you look at the numbers that were included in that report, how would you gauge the market reaction, especially looking at that relatively low placement number?
Because what we looked at is year over year, we were down 2%, but month over month, we were up 500,000 head. So I think when we look the last 3 months in a row, have seen an increase in the total number of cattle on feed. So it doesn't look like we're going to be short of inventory. The futures gapped up yesterday. Some months traded to a new contract high, but you would think if it was going to be, bullish, or that 2% was going to have a big factor in it, you would have seen those markets up a whole lot more than what they were. And then we noticed the feeder cattle index was actually lower yesterday. I think it's going to be hard to get real-world cattle feeders out there to continue to want to bid up for inventory, knowing that all that does is crush their margin.
Yeah, the feeders yesterday, we did have January up $1.85, and March feeders up $1.97 at 185.10. Excuse me, where do you see the most volume on the feeders? What month?
Oh, it's going to be January and March. Both of those 2 months share the total open interest for it.
Okay, so they had a big move yesterday. On the live cattle side, it was more subdued, and December up 47. You had February 87 higher yesterday at 156.72. Are you okay with the way they finished yesterday?
Yeah, it wasn't bad. Boxes have slipped again, and so the box market, the real cash markets are kind of weakening a little bit, and the futures continue to look at the supply issue, and they just want to be long this market because they believe that the lower supplies will create a higher price, and they may. I'm not saying that they won't, but it sure has a lot of resistance against that because those higher prices then have to be pushed onto the consumer, and the consumer level, retail level for prices is already at the highest level we've seen. So I think it's kind of difficult to get that consumer to be more willing to pay a higher price or consume more at this time frame.
On the lean hogs, we finished up yesterday with December 42 lower at 83.80, but you had February 60 higher at 90.15, and all the deferreds yesterday did close a little bit stronger. So we'll see what they want to do today, if they'll follow cattle or trade on their own. Anyway, thanks for the help, Chris. Good to talk with you again. Chris Swift of Swift Trading in Nashville with us. Janet, that's an early look at our start today.